The Morgan Report with David Morgan.
David Morgan of themorganreport.com for the week ending 10 June 2022. Well, I'm on the new landing page for the Morgan Report, and it's in work. I'm not happy with it yet, but this is the general idea here. I think I might change this. What if you go broke in less than 24 hours? Question mark. Anyway, it discusses how that's how long it took, less than 24 hours, for the DJI to plunge 22%. And there's a video here, talks about different crashes in 1987, the .com, financial crash 2008, corona crash 2020, and the crypto crash of 2022. All these things I have covered in the public domain for a very long time. So basically, it talks about, are you ready? Are you not? Money's important. It isn't the solution to everything, but believe me, it's better to have it than not have it. So the big news was this morning, and it was, what is the CPI? And the answer is 1%. And 1% on a monthly basis is 12% annually, which is extremely high. And I want to make everyone aware of what that means relative to what the CPI was in 1980. So this is from shadowstats.com, John Williams' website, and this is part of the free information he gives out. So it shows you the CPI basis, the 1980 metric. So what you can see is this bottom chart that we're now seeing, and he's got to update this a little bit, but 12%. And what is that if it was the same calculations as 1980? And the answer is, eyeballing this, 18%. So you might move it up to 20 or 19, whatever. The point is, it's higher than the official rate because it's calculated different. And I went through the 70s and 80s until now. But the point is that 13% was about the highest I recall published by the federal government. And then Paul Volcker came in and took interest rates sky high and basically killed the inflation monster. First up article I want to do is from Adam Hamilton, Zeal Intelligence. He does just excellent work. I've known Adam for years, and he always keeps me in the loop and sends me his work every Friday. This was published on mining.com, as you can tell, but it's his article. I won't read the whole thing, but anyone that's in the gold market or thinking about getting into the gold market should read this article. In fact, probably should read it a couple of times. So he talks about the gold miners' stocks collapse in the mid-May, exasperating contrarian traders. Plunging gold stocks were amplifying a sharp sell-off in the metal itself, driven, as he says, by heavy gold futures selling, fueled by a monster U.S. dollar rally. Yeah, there wasn't a lot of gold that was being sold into the market. It was almost all paper or futures. However, it took the market down. The market's determined by the contracts, not by really how much physical moves back and forth, although at some point it can be. Palladium is a good example of that. The palladium market is pretty well driven by the physical supply and demand. Adam goes back into history, talks about what happened in 2020 with the CV situation and the plunging stock market, and then what they did about it and rose the market back up, and on again. You can go and read this. Again, I really emphasize the fact that you should take a look. Really, what he's saying in the bottom line here, at least the way I interpret it, is that you need gold, and the gold stocks give you leverage to that. And the best way to do it is buy them when no one wants them. And right now, that's pretty much the current situation. So, as he says here, the bottom line is the Fed has reloaded gold stocks for another big run higher. The latest bull up leg was interrupted by the Fed's most recent extreme hawkish pivot ever witnessed. Fed officials transitioned from a big and fast new rate hike cycle and launched the most aggressive quantitative tightening destruction ever attempted. They ignited a monster U.S. dollar rally, which unleashed heavy gold futures, slamming gold sharply lower. But the market's event is already reversing, with the dollar rolling over and gold recovering on resumed buying from both gold future speculators and investors. The Fed's shock and awe tightening jawboning has passed. Higher gold prices are very bullish for the battered gold stocks, which already have great fundamentals, and they do. In fact, a lot of gold companies are doing really, really good earnings. And stocks are supposed to move on earnings. And there aren't too many stocks in the general equity market that have good earnings. Most of them are negative earnings or zombie corporations, but some of the better gold companies still have pretty good margins. Well, let me talk to the platinum bulls out there, and I'm one of them, but I haven't increased my position. I keep waiting. But here's some news. Russia exits Zimbabwe's biggest platinum project. This is a $3 billion project with expected annual production of almost 1 million ounces, or 86% of them, 860,000 ounces of platinum group metals. And they backed out. They pulled away from this, according to Bloomberg. It was a 50-50 JV, and they said no mas. So that's pretty bullish, actually, for the platinum market. And there are other factors that I've written about in the Morgan Report that's regarding platinum. Just hasn't moved. I mean, if silver's been disappointing, I think platinum's been even more disappointing. But so few people ever invest in the platinum market. It's kind of a non sequitur. It's a non-starter. Most people don't even think about platinum as an investment. But might be time to take a look. I couldn't resist this one. Excuse me as I take my tongue into my cheek. And I'm not saying it's invalid. It's just so interesting. An asteroid mining startup will soon launch on SpaceX rideshare mission. You can read the article. It's on interesting engineering. An asteroid mining firm, Astroforge, just had its ambitions to mine the first asteroid by the end of the decade, boosted by a new round of funding. The Y Contributors startup closed a $13 million seed round, according to TechCrunch, and the money will help to carry out its first two key goals, including demonstration of flight launched aboard a SpaceX Falcon 9 rideshare mission next year. So very interesting, mining asteroids, something to think about over the weekend. Now, this will be the last article I talk about on this weekly perspective. It's from the Washington Post in the business section. Behind the nickel mess on the London Metals Exchange. Traders, brokers, and clerks on the trading floor of the open outcry pit at the London Metals Exchange in London, United Kingdom, on Monday, February 28, 22. The turmoil unleashed commodity markets by Russia's invasion of Ukraine worsened on Monday as the LNG orders were paused. Finance for trade in raw materials dried up, and the Black Sea wheat sales froze. Well, you can read the article and the halt in trading, why it was such a focus, what went wrong. Well, my own opinion of that, but I'll let you decide. What is the broader impact? And of course, I would add there is, would it spill over into other commodities such as silver or copper or others? What was the fallout? I think we should look at this. The crisis that threw the LME in the global spotlight, with critics ranging from the IMF to Citadel Securities. Nickel is a key ingredient in stainless steel used in everyday appliances. Attention turned to the risk hidden in the opaque corners of the trade in natural resources, including vast ecosystem of privately negotiated over-the-counter derivatives that skirt the LME's clearinghouse and margin requirements. Most of the big nickel short bets have been in such deals, so exchange didn't grasp the scale and potential systemic risk of the position. In May, it unveiled a plan to force members to report over-the-counter positions. So wrapping up on the blog page here, I did an interview with Mike Manuel from Rethinking the Dollar. Really like Mike and his insights. Another one here on Sound Money. Did a kind of a roundtable with Chris Martenson, Robert Helms, and really had a good time on that in different perspectives, kind of all in agreement on most things, but I think it would be worth your time. Remember our quick links to our different pages, our YouTube channel, Twitter feed, and LinkedIn. LinkedIn I'll go to real quickly here. As I've upgraded this, as I think I mentioned earlier, putting a little bit more into this about page. Since I am the editor, I'm not sure. There we go. So basically on the about page, talk about the problem, current situation, how I can help you, and what's available for the free letter, the premium subscribers, and our mastermind series. And then there's this button here, this link here that you can go to and subscribe. So I'll leave it there. This is David Morgan of themorganreport.com, signing out with this week's Weekly Perspective.